The fourth one is HOA certification. Okay. So if your borrower, okay, is purchasing a condo in an HOA community, they will be required to pay. And at this point, it's set in stone. Okay. It's every condo right now is offsetting this or utilizing some type of third party, okay, to proctor the certification. Okay. Again, you as a loan officer have the option to pay for it, but it's gonna range anywhere from, I mean, the cheapest recently I've seen, I think it was like $275, but it can go up to $300, $700 easy. Okay. Right now we had a cancellation in Sydney. You can, I think it was, or maybe April can confirm this, but there was, including the rush fee, it was closer to like $600, $700, because there are HOAs now, they're third-party verifiers that are charging for every line item. And I'm going to explain. So when you request a HOA cert, do you guys know what's entailed in an HOA cert? No? Okay, thank you for being honest on. Number one, and the most important one, is the questionnaire. Okay? I have it up here. So we're going to actually come back to it as well. But this is the Fannie Mae questionnaire. Now, lenders will have their own version of this questionnaire to be filled out. Okay? This is the actual Fannie Mae questionnaire. It's 8 pages. I'm just going to note here real quickly. And I am going to go over time here, it seems like. So I apologize that in advance. Numbers page 6. Okay? This is a new one that was added. The addendum was added back in 2020 or 2021 as a result of the Florida condo fiasco. You guys all heard of it, right? The massive condo association that suffered major damages. This is a direct result of it, this addendum. And this addendum, we're going to come back because I do want to spend some time on this a little bit, okay? Okay, so in addition to the questionnaire, there are additional documents that we as lenders need to review, for the lender to review and approve that association per Fannie Mae. Okay, so in addition to the condo questionnaire, evidence of insurance, the master policy, right? The umbrella, right? They need to know there's sufficient coverage for that association. The bylaws, okay? The CC&Rs, in case, you know, that needs to be reviewed, because, you know, one component is what happens if the borrower defaults on HOA, or what happens if the borrower defaults on the loan. Are there provisions? Are there guidelines that state, you know, the HOA can act upon it, you know, inject themselves before the lender? So there are things like the so there's the CC&R and the bylaws, and then another thing is the budget. Okay, they want to see the budget. They want to see if the budget is healthy, right? Every HOA, as I was a part of my board for 2 terms, 4 years, right? We do a budget for the HOA, right? They collect HOA fees from the homeowners, and then we have to budget that out for landscaping, water, plumbing, road repairs, you know, roof repairs if your condo association needs it, swimming pools, et cetera. Along with the budget, they're going to request for the reserve study or the reserves. Okay, they actually want to see a statement, a bank statement, or something certified by the board, you know, verifying how much funds are in the reserves, because Fannie Mae, Freddie Mac does have a 10%, I believe, reserve requirement. Okay, I just dealt with one on my own where the reserves is less than 10% of the budget. So let's just say the annual budget is $500,000. Okay, just a quick question, guys. Pop quiz. What will be Fannie Mae's reserve requirement for that association if the annual operating budget for that association is $500,000?
100,000?
No. What was it? What was the percentage I said earlier? You guys catch it?
10%?
Yeah, 10%. So what would it be? 10% of $500,000, 50,000.
50,000.
50,000. So 50,000, right? So we had a scenario where they had 26,000. And so now it's considered non-warrantable. Okay. So yeah. So condo questionnaires, and Peter, if I'm missing anything, you could feel free to chime in. Right. There's a questionnaire. And again, the questionnaire, the budget, the reserves, the insurance, the bylaws, the CC&Rs. And that's pretty much it for the most part. Understand that some of these third-party verifiers will charge for each item. Some of them will just say, hey, it's about $325. We'll provide you all of this. Okay. Any questions on that? No? Okay, good. So again, upfront pocket, out-of-pocket expenses for our borrowers. You have to understand and set the expectation properly up front. You have a client and you go, oh, great, I'm going to give you the best rate and the best fees. And they go into contract. They go, sir, and let's just say they paid for the credit report. Sir, I need to collect $600 for you for the appraisal. Oh, why didn't you tell me about that? Sir, actually, if you're going to go for this property, I realize we need to squeeze out a little bit more income. You're going to need a little bit more income to qualify. I do believe it's there, but in order for us to qualify it, we do need to order a WVOE from your employer. Sir, I'm going to need another $200 there. Oh, sir, you got into a condo. We need a condo certification. Every lender requires what's called a every lender requires the condo to be certified by the lender. That we need about another $300, $400 there. Guys, I will guarantee you will lose your agent, not just your client. Okay, if that happens. Okay, you have to be aware of these costs. You have to be aware that they can absolutely come up. Okay, especially here in California where prices of homes are high. There are more and more condos. Okay. And so you have to set the expectation up front. Okay. So those are the 4 costs. Now, kind of leading into, again, I'm going to split this up to two sessions. Condos. Okay. I'm going to go back to that questionnaire and share this questionnaire. I'm going to go over some hot items on this. Okay. Everyone see the questionnaire fairly well? It's clear. Okay. So every lender, or many lenders, or I should say many lenders will have their own form of this questionnaire that they so this is a little note to self and the processing team. Again, if a lender requires their form to be filled out, when the borrower or you, the loan officer, goes to order the HOA form, the questionnaire form, okay, just note that they are not going to assume a lender's questionnaire. They're going to go off of a default, their own templated questionnaire. Okay. Now, some like AmWest, they have their own questionnaire. AmWest has their own questionnaire. So they're not going to accept the one that was filled out by the verification company. So you have to make sure up front that you don't waste time and additional money if your lender, the lender that you choose to lock with and underwrite with, has their own questionnaire. You have to have the processing team then submit the lender questionnaire to the verification company. Freddie, Paul, do you guys have any questions on that? No? That was pretty loud and clear? Okay. So while that might be a process, our processing team's job, it is something that you should note and circle and make sure, hey, does this lender, because my borrower wants a better rate with Rocket, does Rocket require their own questionnaire to be filled out as opposed to the ones that are provided by the verification company? Okay. So I'm not going to go over this in thorough. Okay. I'm actually going to go over this, or go over the addendum. Okay. The reason why I'm going to go over the addendum is because right now, anyone want to take a wild guess as to what law has made our life a little bit more difficult in dealing with condos? Anyone know the state law that's making our lives a little bit difficult as loan officers? You guys don't know this law? It's the SB 326. Okay? The SB 326. Here, I had it up. I'm gonna share it with you. So here. The SB 326 is a California law that requires condominium developments with 3 or more units per building to have their elevated exterior load-bearing structures, balconies and stairs, inspected by a licensed professional. This deadline was for January 2025. I actually made a mistake. And so processing team, if you're on listening, I do apologize. There is an SB 721. Okay. This is for apartments, not condominiums. But this one was it was extended to January 2026. And I got it confused with the SB 326. Okay. So that's just a little just a self admission there that I made a mistake on. But in any case, this is so right now. So okay, believe it or not, in the guidelines, Fannie Mae and Freddie Mac, okay, the agencies are not requiring the SB 326 to be done. More so that they are just following the suit of the state regulation. And because the state is requiring it, that's why lenders are saying that the inspections have to be done. So this addendum was put in place again, like in 2021, I believe it was, as a result of the condo fiasco in Florida. And what it entails is the safety and soundness and structural integrity and habitability of the building. Okay, so the next few questions, there's like 8 of them or so. Okay, or more actually, 11, is all regarding the safety and soundness and integrity of the building. Okay, and this is where there is a specific question right here. Number 2, number 1, when was the last building inspection by a licensed architect or an inspector? This plays a hand in the SB 326. If your lender or if that community hasn't had the SB 326 inspection completed, right now, most lenders will not do this loan under agency guidelines. Okay, it's going to be considered non-warrantable. Okay, now I don't know if it's because we're still in 2025, despite the SB 326 requiring it be done by January 2025, as I showed you. Mega Capital, okay, with good reason, will waive that requirement. That is one of the very few that I know of, but they are not requiring it. They will allow a provision to be waived for the SB 336 inspection, but it has to be with some type of, with a good reason. Okay. Now, why am I bringing this up? Because condos right now are going through a pandemic of itself. I want you guys to make very, very clear note of these. Again, I'm gonna write this all down in and send it to you guys via an email. But condos are a pandemic of itself because many condos right now are facing issues related to all of this. Okay, so I'm gonna kind of break this down for you guys. Okay, number 1, for the reasons of really nothing other than cost, a lot of condos are not renewing their FHA certification. Okay, all you have to do is go on to the FHA condo site. Okay, approval list. Okay, if you, I'm gonna show that to you guys right now, right here. I know we went through this before in the past. Okay, it might be a little bit slow. You can just play around with it in your own accord. I'll do one example real quick. I'm gonna put in my zip code, which is the city of Placentia. Okay, you will find, sorry, county is not California. You will find that most most, if not all, okay, of the condo associations in an area are expired. Okay, expired. This one this one's gonna expire in December. December. Okay. Wow, Placentia actually has a few more. So I was proven wrong. Okay. This one's still good till 2026. But my point is that many condo associations are expired and they're not renewed. A lender is not renewing it because of the cost. Okay, so here is a city of, this is Diamond Bar or Walnut rather. These are all expired. Okay, so just simply seeing that right there alone, guys, FHA is tough with condos. Okay, because yes, Freddie.
So who is responsible for this renewal or this FHA certification? Is it the condo association or is it a lender?
Okay, so that's good. That's a good question. It is both or either. An association can themselves request through HUD for a FHA to be FHA certified, but I could tell you right now, no one does it. Okay, why? They don't care. They don't want to spend the extra time. Why? Because it's a bunch of homeowners that don't know anything about lending and this and that, and they're not going to do it. Okay. The other way it can be done is through the lender. And Peter, please correct me if I'm wrong here, but a lender can request it. But again, the lender will be responsible for the fees. And if the lender gets this done, guess what? They're opening it up to everyone else. So it's like, why do it then? Right?
So what's the solution? Borrower. What would be a solution to this? Because if, let's say, a real estate agent shows property on a condominium complex that's not FHA approved, they can't access FHA financing for that property.
So to answer your question, the recourse for it is this FHA spot approval. Okay, the spot approval. Many lenders right now, so it's crazy. When I first joined even Giving Tree, and this is not because of Giving Tree, I'm just saying when I first Giving Tree, when we needed a spot approval, it was like, let's go with UWM, right? 3 years ago, UWM, and to that point, UWM was one of the main lenders that was, broadcasting out, hey, we do FHA spot approvals, we do FHA spot approvals. Okay, right now, off the top of my head, right now, we got Mega, we have the lender, we have AmWest, we have who's the other one I'm doing with? I'm doing one right now. Is it Emmett? I know Emmett does it. I'm doing one with
Remen.
Thank you. Who's that? Yeah, Remen. So many lenders are doing FHA spot approvals and they're broadcasting that out now. Why? Because they're losing out on business, right? So if they don't do it, right? To your point, Freddie. So unfortunately, though, however, FHA spot approvals does require the borrower to be in escrow, whether that's you're in escrow on a purchase or you're doing a refinance. So I have one right now, a spot approval that Remnant. It's a refinance. Okay, so it has to be an escrow. The borrower has to, yes. So check this out, right? Whether it's a purchase or a refinance, borrower has to order credit. They don't have to order appraisal though, so that's a good thing. Because remember, with FHA, we need the FHA case number first before you can order the appraisal. And the FHA case number won't be assigned until it's FHA spot approved. Okay, but the borrower will have to pay for the HOA certification. Okay, the lender will then submit it to HUD for review. I don't know if it's now. I don't know what kind of effect the government shutdown is having, but I can tell you the spot approval. I've only done a couple now with Giving Tree. They're very particular. Let me put it that way. Okay. So if you ever apply for your NML license number or broker's license, they're very, very particular about how you fill it out, or immigration paperwork, right? Or getting a visa. They're very particular. Any little thing, they're going to kick it back to the lender and say, we need additional information. or please fill this out, or please do this, please do that. Right now, for one reason or another, like mine right now that I'm doing, I think it's near over a month right now that it's been taking. Okay, there was one in the past where I did on a purchase. Gia's on the call, I see. So yeah, I had a Gustavo Lopez. While it went back and forth, it took less than 2 weeks. Okay, those are my experiences. I don't know if the rest of the team has had other better experiences, but just do know that it can take some time. Okay, any other questions on the FHA spot approval? Okay, so if it's not FHA, then we're going conventional.